Hello, this is Rachel from Kalkine Media and you're watching Kalkine's educational series. Please subscribe to our channel and press the bell icon for notifications for our latest videos. The banking system is the backbone of any country's financial system strength. Modern banks are not only providers of credit and reserves of cash, but are also associated with financial trading, stockbroking, insurance and funds management. Australia is home to banks that provide a unique mix of traditional banking functions and also contemporary trading and insurance facilities. With over 80 banks as part of its banking structure, Australia has a robust financial sector. During the pandemic, the performance of Australian banks is a testament to the same as these institutions maintained sufficient liquidity, even in trying times. During the initial stages of a pandemic-induced global crisis, Reserve Bank of Australia Governor Philip Lowe stated that the country owed a great deal of credit to the financial sector for keeping its head above water. Some of the biggest banks in the Australian financial sector are the following. Firstly, we have the Commonwealth Bank. With branches across Asia, Europe and North America, the Commonwealth Bank is a household name in Australia. It was founded in the early 1900s, and the bank has outgrown the tag of general banking services provider to becoming a booming business with over 800,000 shareholders. For the March 2021 quarter, the bank reported an unaudited NPAT of $2.4 billion, which was 24% higher than the pandemic-riddled March quarter of 2020. Despite the widespread economic slowdown, the CBA reported a strong balance sheet during the quarter with a customer deposit funding ratio of 75%. Over the last year, Commonwealth Bank shares have shown an unwavering upward movement, reaching a 6-month high in mid-June. The uptick came after CBA announced the sale of its Australian general insurance business. Shareholders of CBA have not been disappointed despite the hard-hitting ill effects of COVID-19 over the economy. The bank's large market cap of $184 billion certainly adds to the credibility factor. Next, there is the National Australian Bank. Touted as one of the largest Australian banks, the NAB serves more than 12.7 million clients across Australia. The bank provides a diversified range of financial products, including retail, business, institutional banking, and also wealth management products. In terms of assets, deposits, and market capitalisation, the NAB tops the list of Australian banks. During the 6 months ending 31st of March 2021, the company reported cash earnings of $3,343 million, with a statutory profit of $3,208 million. This was followed by an update on the bank's interim dividend to 60 cents per share. The NAB has been urged by other banking institutions to not lend towards environmentally harmful operations, including oil and gas projects. In response, the bank has stated that it would adopt a more conscious effort after reviewing current funded projects. The Australian New Zealand Bank provides banking services to customers across Australia and New Zealand, with Australia being its biggest market, with approximately 6 million retail and commercial customers. The bank is a pioneer in terms of the internet banking facilities provided by it. For the half year ending the 31st of March 2021, the ANZ reported a profit before tax of $4,376 million, with total cash profit of $2,982 million. As of the 31st of March 2021, the ANZ held a net tangible assets attributable to ordinary shareholders worth $58.5 billion. The ANZ Bank also reported that it is expected to enjoy the larger customer base once the new trade deal between the UK and Australia is signed. The free trade deal would see some tariffs being lifted or lessened, creating opportunities for Australian businesses. Moving on to one of the oldest banking institutions in Australia, the Westpac Banking Corporation has gained the utmost trust of the Australian population over the years. The bank has 5 divisions to provide banking services. That is Consumer Bank, Business Bank, BT Financial Group, Westpac Institutional Bank and Westpac New Zealand. The bank aims to help fellow Australians succeed in the business through its portfolio of financial services brands. Westpac caters to a broad range of customers in risk management, customer remediation, simplification of technological solutions, and optimisation of returns. For the first half of 2021, WBC's net profit was up 189% over the previous year's first half at $3,443 million. Additionally, cash earnings during the period amounted to $3,537 million. Amid these promising figures, Westpac announced an interim dividend of 58 cents per share. And finally, we have the Macquarie Bank. Founded in 1969, Macquarie's positioned itself as the largest investment bank in Australia. The wide-ranging services provided by the bank include asset management, financial advisory, risk and capital solutions across debt, commodity and equity markets. The firm has made its mark in the field of mergers and acquisitions and is constantly releasing lucrative rewards for its shareholders. Macquarie was dubbed the Millionaire's Factory prior to the global financial crisis, as its bankers benefited from big pay packets as the group worked on large mergers and acquisitions and expanded across the globe. Macquarie has obtained a steady inflow of borrowers, higher by 25% in April this year and 33% in total over the last year. The bank's stock market performance has also been robust over the past few months. If you like this information, please like, share and comment on this video and subscribe to our YouTube channel. Press the bell icon to get notifications for our latest videos. I'm Rachel Jones for Kalkine Media. For more regular updates and information, log on to our website, kalkinemedia.com.